infrastructure, on electricity distribution, or on water. There are investment going on in everything. Now, I would like to really get your views. Where do you think in the next couple of years to come, where do you think the most electrons and most dollars will flow? Let me start from Dr. Siddle this time.
So, as I said, Bosch is in automotive, so we look at e-mobility as one of the fields of potential interest, and that includes things like two-wheelers, so scooters, e-scooters, and that's not what you currently can buy in China for, I don't know, 200 or 300 euros, but something that is appealing so that people will really use it. And then also here in the value chain, power electronics, and that is not only for e-mobility, but that's then also applicable for solar inverters, etc. So we look at things like silicon carbide, gallium nitride, and other power semiconductors. And that's a very early stage at the moment, but I think that that is definitely one of the fields that are still of interest. Other than that, as I said before, we're still interested in the balance of systems. We can't invest in something that uses 50 million then to put up a fab. So something in that area is also of interest to us. And lastly, it was already mentioned before, water purifying technologies, mainly around residential and maybe small commercial, and not in the area where you then purify oil or water that you use for drilling oil, but really for human use then.
Thank you.
Yes, so a lot of the things we're doing are on the demand side. They're controls companies. I think that there's going to be increasingly an opportunity for efficiency companies that take advantage of some of the smart grid infrastructure that's been deployed, and in some cases that go right around the smart grid infrastructure and just take advantage of the data that's already available in buildings or in residences to make better decisions. And we've got a number of investments there, and I like that theme. Frankly, I like the theme. If you look at what drives a lot of energy markets, it's the volatility of pricing and the feedstock or the key inputs. And I think to that extent, we don't have biofuels investments, but I think things that play off of the pricing of gasoline as opposed to the pricing of natural gas and electricity, coal, natural gas, electricity generation, I think will continue to be fairly cheap. So things that are driven by petroleum, I think there's a lot of opportunity. It's just not an area where, as a firm, we've committed to have a practice. So a lot on the demand side for us. I would love to find something in water. I've looked at water from 50 different angles, and I just haven't been able to. A lot of the problems with water that are most acute tend not to be domestic problems in the U.S. or problems that are priced into the market. So I've had difficulty finding investment that really made sense for us in water, but I would love to find someone who shows me a great opportunity there. So.
Thank you. Mike, let me answer this question in a different way. I mean, you guys drill large wells for gas. What do you think about, both of them are talking about the water problem as could be one next thing that could be impactful for most of us on this planet. When I was reading about 1 billion people on this earth, they still don't have safe water. What do you guys think about water as an investment, apart from oil?
Well, I don't tend to look at the market in these ways. I can answer this question in the perspective of what we're doing, what we're looking for. We actually invested in a water company 2.5 years ago. And to give you some perspective on that, to be very almost crass about it, for us, the money comes out the hole in the ground. Everything else involved is cost in order to get the product that's consumable. So if you're talking about water and water treatment, it's a cost. And if you talk about treating produced water or frack water, they can be very large costs. So when we've looked at this, we've taken a different view, and I share your sentiments. Water treating is very, very complicated. And it requires often very many sequential steps. And you can't find one silver bullet that's going to solve a problem. That's a big issue for us. However, what I do know is these things can be very, very expensive. And most Everybody's running after frack water like crazy now. Every man who thinks he can do anything with water is running after it because it's a big business. There's a lot of environmental concerns around it, and we're looking at companies that can put DNA traces into that water, so we know exactly where the water goes in, what part of the fracking process, where it comes out, we know if it's ours. Those are the types of things that we're looking at. But what we're not doing, which I see in the rest of the market looks at current technology and said, how can I spin this? How can I fit this to frack water? We didn't do that. We looked at a company that looked pragmatically at this and said, what's in the water? What do we need to take out of the water so we can reuse it or recycle it? And when we started looking at that way, we're looking for absolutely very, very low energy ways, very, very low capex ways to get this done. So we invested in a company that's experts in microparticle physics, self-assembly of polymers on surfaces, and they've been able to use that technology to drag out certain toxins from the water and actually leave a lot of stuff in. We don't take the brine out of water with this new process. We can leave that in there. However, when you do that, you have to understand that the brine affects some things that are put in the water to facilitate the fracking. So we have to make some other compounds that are tolerant of brown. But that whole package is the way we're looking at it. And it turns out to be able to treat this water at the 10th the cost of something like reverse osmosis or forward osmosis, distillation, these things, which are very, very high energy ways to get that done. So that's the water one. The other one is, I think we've come to a realization that we hit peak gasoline in this country about 2 years ago. We're never likely to go back there. So there's a shift there that's happening. Likely, and what we're projecting is a shift towards more use of diesel. Diesel is much more efficient. The new clean diesels give you far more miles per gallon, less in terms of pollutants, less particulates. So we're looking at those things, in a very interested manner. There was something else I was going to say. I've forgotten, so I'll come back to it.
Jim, let me ask you this question in a different way. In the context, you and me are colleagues, so we know a little bit about the different opportunities and problems in the clean tech area. My guess is in the next 2 years, the way the solar market is growing, there will be $250 billion worth of assets which are either managed poorly or unmanaged in terms of solar farms will be on this earth. $250 billion. There's a huge opportunity for really managing them better, making them more bankable, and there are ways. I mean, if the balance of system cost can come down and we can do smart ways of doing it, that will make the whole solar system, solar energy, or wind energy for that matter, more and more bankable. Tim, what do you think is the opportunity in that area?
Well, that's a softball question to tee up for, in some ways, what I do. And I think there's a tremendous opportunity. And maybe as background, I think if you look at renewable energies in general, but solar specifically, most of the attention over the last, it's an industry in its infancy, and most of the attention has been spent on technology and developing projects and building projects and financing projects, and not a lot of attention has been paid to, well, how do you operate this asset which has a 25-year warranty? Not too many products in the world today have a 25-year warranty. It's a 30-year, maybe 40-year long-lived asset. As Gopal points out, there will be massive amounts of capital invested in this installed base as we go forward. I think, frankly, this question of efficiently operating power plants, in this case solar power plants, has been largely neglected. You can see clearly that there are percentage points, certainly up to 5 or higher of additional efficiencies that can be brought to power generation today just through the optimal use and maintenance of those assets. And this is just in today's context. What happens in year 18 or year 25 when that asset is, we're 18 years further down the road with that much additional technology advancement? How much more can we extract from these assets? So there's a tremendous opportunity there, and I would argue that very few people are really paying attention to this question. Most people are still figuring out how to build the better mousetrap, the better solar module, etc. How to even innovation and financing. But I think anyway, that's maybe it's worth mentioning this financing in a different context. I think that these assets will trade over the years. If you have a solar project, given structured finance that was built at a relatively high rate of return because it was perceived as a somewhat risky technology, even now, but especially 2-3 years ago, maybe that project commanded, from a structured finance perspective, a fairly high rate of return. I think these assets will trade over time as they are de-risked to increasingly more efficient forms of capital. There'll be opportunities there. So anyway, it's people I think forget of this long lifespan and long runway, and we're just beginning really the solar industry in terms of building solar power generation assets. That number will obviously just increase exponentially because each year is additive on the existing base.
Thank you, Jim. I think you guys do take a very diversified view on your market segments and the size of industry and the types of industry. And there are a bunch of pictures over here, and the Cleantech is not, as I said, it's not a single technology, it's multiple technologies. Where do you think, among the whole landscape, what do you think is going to be your focus, or what do you think should be the focus in the next couple of years?
From like where the capital will flow, or where specifically Crosslink is navigating, or venture investors?
I was talking in general terms of the market trends.
Okay. So clearly, the most of the money will go where the biggest markets are. That's going to be EV. It'll be EV and biofuels. I mean, if you just look at the budgets that the Fords, the GMs, the Chryslers, the Fiats, the Toyotas of the world, Mitsubishis, Tesla's a drop in a bucket compared to the amount of R&D that's going to be thrown at those problems. So, that is, probably as it sits today, there's probably $3 to $10 billion of R&D spent a year working on the EV problem. When you look at biofuels, if you go across, the Exxons, the Mobiles, the BPs of the world, and then you take the 5 or 6 startups that raised, over their lifetimes, probably $1 billion in aggregate, maybe 750 million. That probably is going to rank second order to it. And then everything else will fall far, far below it. That doesn't mean that there's not a tremendous amount of opportunities to address those markets, but from a pure dollar standpoint, that's where the money will flow, in my opinion. It will be EVs and biofuels. And then probably set third on that list will be solar. Where venture dollars will flow, I think, primarily will flow to the energy efficiency, balance of system, lighting type environments. I don't think there's many investors today looking at pure LED plays, but I think a lot of investors are looking about, just like 3 or 4 years ago, people were looking at the balance of systems plays in solar. So, is it phosphors that sit on the top of LEDs? Is it the mechanical and thermal housings that sit behind LEDs? Is it the fixtures? Is it the downlighting? Is it the reflectors? There's thousands of different things that are happening from an innovation standpoint that can be done on fairly low amounts of capital. And I think that's where you're going to see a lot of VCs really kind of plow their capital into.
That is very interesting, and I think Chris would like to hear your views on where do you think the next big opportunities for the company like Goldman Sachs would be. Where would the next big market?
Yeah, well, if I was to look back historically and say, what did I think the sequence of clean tech evolution was going to be, I would have said solar. Obviously, we saw that industry develop early. Then I would have said smart grid, which I don't think we saw was next. Then potentially lighting and biofuels. And I think what we saw is the bioconversion companies, the biofuel companies, jump ahead of smart grid. I would say primarily because of the size of the market opportunity. and the ability that in a market, and as I said before, we could get investors looking multiple years forward because the market potential was so enormous. No single one of these companies needed to take more than a fraction of a percent of a enormous commodity market to become big companies. There's a couple of areas. So I think smart grid is going to be one that does develop soon. I would say, there's the natural gas phenomenon, low price cost, creates an interesting dynamic in the chemicals market. And the more you crack natural gas, the less heavy carbon molecules you get that you would normally get from crude. And so, not saying that the shortage of molecules that we use to make plastics, like this bottle, or all of our, consumer electronics components. If you can make those products at the right pricing point, I think that's a big opportunity. I think that's going to be a second wave of what originally was called the biofuels, but I would say more bioconversion market from a public market standpoint. So I would say, between smart grid and more chemical-focused, biologically derived chemicals would be the biggest areas from my perspective. And I'd say one other area that is not usually talked about because we think of it as just trash, but it's waste. Waste is a big issue. I just downloaded an app called 7 Billion. We're close to 7 billion people on this planet. We're very close to 9 billion in our lifetime. That's a rapid acceleration. You layer on top industrialization and that, and we've got real problems. And if you take a 20-year view, we need to be doing everything we're doing now yesterday. But waste is something that, right now waste management says, I'll take your trash, I'll throw mud on it, and I'll put it on land. They're running out of land. It's costing a lot more for that waste. And by the way, all that organics and all that plastics, you can do stuff with. Right now it's just getting thrown in the trash. You can do stuff with that. If you can do it at the right, price point, which of course is the issue, that I think is going to be a next big, I wasn't thinking about a market.
Well, thank you. This was indeed a very different perspective on the trash, but I didn't think about it that way. Well, there is always, when we talk about new technologies and we talk about new products, we often forget about the segment, the place where they would be used. And the example is, we're talking about smart grid being the next new innovation, the next big market. Forget about smart grid. Look at one of the pictures here. We have a grid here. It's not even a grid, it doesn't look like a grid. It's a bunch of wires being thrown on a pole. And if anything happens, you don't even know where to pick the hand, or which wire to disconnect. So it is a very well, it's a market-based economies and market-based products. So that brings to my next topic of discussion is, we have seen the whole energy market being influenced by Russian oil getting into Europe, and then European guys going on solar, now that's beaten up. And then the whole cycle is moving to here in US. And then we have a Japan earthquake, and the whole nuclear reactor power is going away, and it tries to go on the solar side. And China and India are who knows what's going to happen. China is going in a big way on the utility grade markets. India is still sleeping market. Will wake up one of these days. The bigger clean tech problems over there, and who knows, the island electrification and cleaning of water is a different problem. So every geographic region has its own deployment challenges on clean tech. Let's talk about what are the opportunities and where and which countries are going to get benefited out of this. I would like to start with you, Chevron being a global company. Where do you think are the opportunities for what kind of clean tech areas?
From Chevron's perspective, there's two places where we're very highly invested. The first one is the northwest shelf from Australia. From which we're producing LNG.
We've got $40 billion tied up and allocated to large projects there, and most of that will be shipped into Asia. So that's the biggest area for the biggest projects that we're talking about. In addition to that, we own quite a number of leases for shale gas. Both in the United States, we purchased Atlas, which is a grabbing up there, and also own a number of leases in Poland, which we'll be doing test wells on and see if we can produce from there. So, as you were saying, that this idea that there's going to be a lot of gas, it's going to depress the gas prices, but we're going to be there with that.
So, what do you think?
So I think here in the US there's a big opportunity for energy efficiency. Just if you compare the numbers of how much energy a household consumes here in the US versus parts in Europe, honestly I think there is still room for improvement, be it somewhere between 30 and 50%. And that includes building technology, really how we build houses, etc. So not necessarily something that you can do with venture money, even though there are some companies in that space. But overall, I think that's a big opportunity here in the US. From Bosch perspective, overall China is a huge opportunity, and there it's all from especially around mobility and be it clean diesel, etc. Bosch is well, leading there around clean diesel technology, but also electrification of mobility.
So personally, with the fund, I mean, we tend to focus domestically, although we often invest in companies that we hope and believe will be able to take their products overseas. In fact, there's a couple of companies we funded which I think some of the best markets after they prove their product in early customer deployments are going to be overseas. And so a lot of the problems that we're focused on are the demand side problems, the things that Cyril mentioned are real opportunities here. We like to think of investments in companies that can be deployed globally. We also like to look at companies that have innovations. I've looked at a number of businesses who have deployed something in Australia or in Europe and are now maybe at a pilot level, but thinking about how they can come here and set up their team. And so would look globally for other solutions that can be applied to these markets. But in terms of markets, I don't have a great view other than to say I'm fascinated by the opportunities in areas like India or China or Africa, places where you don't have the existing infrastructure in the ground, and so you get the opportunity to start from the ground up and thinking about how you deploy and design some of these resources and systems. To actually, my brother is at Coastal Ventures investing in emerging markets. So I live vicariously through him, looking at the opportunities in India and Africa and other places where you can deploy these things. And I think there may be some synergies, but so much of this is really about local economics and local resources and local needs that it's difficult for us to invest overseas.
Just one quick comment or food for thought. I just came back from China, and one thing that I was really astonished about is that they built all those cities there, but the one thing that I found really, really, well, bothering was there was no public transport there. And so they take over basically, or they build a new city from scratch, but they don't put a subway in there at all. So that was kind of astonishing for me, coming from Europe, where public transport is much, much better than here in the US. So I thought like that would be the opportunity. So that I think that is something that should be addressed over there.
Chris, I would like to go to you.
If it's a good clean tech company, and it's not in North Korea, Cuba, or Iran, I will take it public.
Well, that was the shortest sweet answer.
You know, it's a global industry, right? So we spend time with companies in Russia, New Zealand, China, India, Canada, Europe. I'm hoping to file a company that's got a facility in Europe soon for an IPO, facility in Europe based in Canada, US operations, going to Thailand. You know, this industry is very global. And so I would say investment opportunities, I'm sure, are the same way. There are challenges in each jurisdiction that you have to evaluate, and I'll let some of the more venture guys talk about those challenges. You know, there's, unlike technology, which has some very centralized jurisdictions for innovation, you know, the Valley being one of them here, we find a lot of very unique, innovative technologies across the globe in Cleantech.
Let me narrow down this question for you. Since we were talking about a lot of smaller investment and technologies coming up in lighting and automation and energy efficiency, what do you think could be the inflection points in our building automation and building management, where we have most of the enterprise like this, is a 30% load is on lighting and 50% load on air conditioning and 20% load on maybe other things. What do you think could be an inflection point in managing these loads, and what kind of investments would make it sensible?
So there's a ton of stuff happening in that space. There's a ton of great ideas that are looking to try to make commercial, industrial, and even the more basic, the residential home, a much more energy efficiency play. And that's an ROI sell, right? So from an inflection point, it's hard. Most of the businesses to date have been either a hardware plus professional services component and then a SaaS component behind it. And those type of businesses you build brick by brick. It's a sales execution business. And you know, if you go look at, you know, one of the things people ask all the time is why is there such a craze in SaaS? You know, why do venture investors always want to invest in SaaS? And the reason is because you get to see how much, for every incremental dollar you put into the business in sales and marketing, you get to see a result on the revenue. But it never really inflects. It's not like a product business where I spend $10 million on a semiconductor or a solar manufacturing facility, and then I can sell $100 million worth of product the next week because of end demand is so strong. So in the building automation space, it is a energy efficiency play, which is a software play, which means the key to it is going to be how to decipher the right sales and marketing and how to decipher the right go-to-market plan there. I think that's clearly a Europe or America play if you look at it from regions. And if you're doing a materials play, so if you're going after, you know, new cements, new woods, new windows, that's a new construction play, and that I think you have to drive through China and India. And I think that's a tough sell. I think it'll be a tough sell there because none of these technologies are at cost parity on day one. And if you look at those end markets, pricing drives volume, you know. So the building automation space, I think, is a fascinating space, and I think there's a lot of money to be made there. And I think the company that figures out how to go to market there will be the winner. And I don't know who that is yet.
But, regarding building technology and energy efficiency in buildings, one thing we've looked at the space, and I don't know whether there needs to be an inflection point, but I think one of the fundamental problems there is right now the ownership structure. That somebody leases a building and he doesn't own the building, and there is no incentive for the owner to put energy efficiency in there because he doesn't pay for the power. So that's the overall problem here in that space. And if somebody can find some way around that, I think then that's the winner.
Yeah, I was going to say the same thing. Like when you pass through energy savings to 50 tenants in a in let's say 555 California, and it's minimal savings on your lease if you pass it through, and you have to go through the building manager, who, you know, as we used to say in tech world, nobody gets fired for buying IBM, right? like the last thing the building manager wants to do is disrupt what works. And so that's a huge challenge. I think the way that industry takes off is owner-occupied buildings make a meaningful switch. The ROIs are real. The baseline is undetermined. So what's your ROI driven off of? What is your baseline energy cost and then your savings? So we need many months, many years of data to be able to calculate then what the savings are going to be. So it's going to be piecemeal. There's not going to be one comprehensive solution. It's going to be, I'm going to do some lighting, I'm going to do my HVAC, I'm going to do this, that. You know, it's going to be a piecemeal industry for a while, I think.
So, and I totally agree, and I think that's why market segmentation and go-to-market is absolutely critical. Because, you know, you go back 10 years, right, and you look at Salesforce.com. You know, for 25 years, Oracle, Siebel have been selling CRM software, Microsoft Dynamics, etc. So, you know, what did they do? They're like, well, I can sell a cheaper solution, but I don't want to spend a year trying to sell, you know, the next IBM on my CRM solution. So I'm going to put together 5 or 10 questions to ask someone, you know, what is your pain point? Do you have budget? And can you do a demo? And that's how they went to market. And I think that's the key for the building automation and energy efficiency space. If you go play around with REITs and owner-occupieds, I think it's going to be a long slog there because, yeah, if you get CBRE, he controls, you know, 10 million square feet of commercial real estate, but every state's different, every building manager is different, et cetera, et cetera. You know, that's why we have an investment in the data center space, right? How do they charge their services? If you go look at Equinix or you go look at DLR, Digital Realty Trust, so DR, you know, you look at all these guys, it's power per square foot. So power is really important. So you solve that problem there where there's a pain point, and then you try to migrate the technology somewhere else. I think that's key.
I'll take maybe a spin on your question of inflection point. I think I know. Maybe as a little bit of background. You know, when hired into SunEdison in services primarily means maintaining power plants, but really the mandate has been to, we have a lot of relationships with particularly commercial retailers, big box retailers, etc., and great targets for efficiency. And it's part of my mandate to figure out that sales and marketing strategy, which is a tough nut to crack. And we already have a pretty good point of leverage in that we are already deeply ingrained in the energy infrastructure of a lot of these companies. We're also entering the residential space. And try as I might, I'm only about a month or two into the job, I'm really trying to figure out, I'm not an energy efficiency expert, I'm trying to figure out how to make this work. And there's this, I'm fascinated somewhat by the counterintuitive sides of this. There's a McKinsey report on my desk. I think it's public domain or free out there if you want to get it. And in there it says something to the effect of there's $3 trillion of dollar bills lying around that can be picked up through the process of all forms of energy efficiency. That is huge returns on efficiency. And so I'm baffled somewhat with all the great technologies that are out there. Frankly, even if you look at the economic times, that there's plenty of incentive for most people to save money. Back to the point of inflection. I think the point of inflection is when consumers care, or when building managers care. And part of that is this issue of REITs and the misalignment of incentives. And actually, this is I've not done this before, but it's maybe worth doing in this audience, and as maybe part of my market research. How many? We're all, I assume, fairly technology savvy and thoughtful people at an event like this. I'd ask how many people really understand number one, look at their energy bill, and number two, understand it, and three, really trying to do something about it. I'd love to see a show of hands. So,
not too many.
Maybe 25% of the audience. And so I come back to this. I think there's something very important about the adoption curve, the learning curve for people to understand, and maybe ultimately the economic incentives are not large enough for most residential customers to take that initiative to invest in that technology or actually invest something, anything to proactively reduce that energy bill, manage their energy use effectively. It confounds me. It's a puzzler. I'm going to keep puzzling on it. SunEdison is continuing to puzzle on this question because we don't do it today. We do a little bit actually. We're in a number of Costco's, for example. We're trying to work with our existing fleet. But I think it has to do with some form of psychology, subtle psychology, and customers have to care before you can convince them to pick those dollars up off the ground.
Very well said. I totally agree with that. You said it has to be the mindset. Mike, you have something to
Yeah,
add.
I wanted to say one thing. I actually have looked at this a little, and I can't tell you what the inflection point is, but I have a couple of perspectives. I've spent a lot of time with the California Lighting Technology Center at UC Davis, and looked at some lighting and fixtures and what have you. And it comes down to something that you said about the efficiency. And it turns out that when you look at most people, they don't care about the efficiency. And it goes even to people owning commercial facilities. And I remember vicariously through a friend of mine talking to Safeway. And Safeway, everybody knows if you put LEDs in, they're going to save you some money. But the main thing is that the bulbs are meant to last a lot longer. So it turns out the economics didn't come from the efficiency. The economics come from not having to get the ladders out to change the bulbs as often and to change the ballasts. And that became the driver more than anything else. If you're doing that, the other thing is that to start off in this business, it can't be a rip and replace function, too expensive. They've got to be retrofittable. And you've got to start from there. Won't always go there. And as it grows, I see a lot more future in these SMDs, these surface mount devices. I think there's a lot going on there.
Well, I think this was an excellent point. And the point made was that retrofit. Here's a food for thought for all of you. When we take a building, we expect a RJ45, RJ11. We don't even have to think about it. It's standard. USB interface is a standard. Things at 4x2, there's lights, there's a standard. But think about it. We always had been carrying the adapter when we moved level from here to Europe or from here to Japan. Electricity is not new. What we had not been able to standardize on the ages-old industry. And unless only if you want to drive the economics of scale and bring it down to the kind of internet or RJ45 is, where somebody has to start thinking about the standardization on building automation processes, the fixtures, and the wiring or things like that. I think nobody in the industry, I don't see at least, nobody is driving that kind of standardization and protocols in the industry, and somebody has to take that leadership. So thank you, this was a great debate, and I didn't expect this to be that lively. So thank you for giving us your views. So for the sake of time, I'm going to be skipping a question over here, but I think what I would like to do is, I have two pictures over here. And all you guys, you have money that you want to be investing in certain technologies that you're passionate about, and you talked about all these things. In the clean tech industry today, you're doing selective investments, you're watching your electrons flowing, where the electrons are flowing, you take anything IPO. Do you think your money investment today is the first picture, or you guys are selectively investing in certain areas? And if yes, where do you agree? Which picture do you agree with? And if we agree with the second picture, what would you pick up? One thing. Be precise, and what would you pick up? Let me start with.
So definitely selectively pick certain area, and I think at the moment power electronics.
Thank you.
Question is that Cleantech, but
well, it is Cleantech.
So you're asking for a particular area, or you're asking? I didn't quite get.
Choose your answer. Don't worry about it. Audience is going to make sense of it.
So I think for us, we're looking at things, and we like to invest in things, as I've said, that aren't driven by commodity, things that have other value. The examples around lighting are a good one. We have an investment in a lighting company, and we found surprising things as we've gone out and done deployments. We've deployed lighting controls in garages, and one of the things that we found was that one of the aspects they really valued about that was the security element of all of a sudden being able to have their attention drawn on the monitors to the area of the garage, which lights up because all of a sudden there's a presence there, because when we're deploying there's a motion sensor there with it. So there are small things, and this is just one example, but there's points, we look for points of value where you have a good ROI, and you have a compelling value proposition, but you also have other elements which help drive the sale, or which actually may be the principal drivers of the sale beyond just a pure energy ROI.
So fundamentally for Chevron, we're interested, and the real reason that we're doing this, we're interested in providers of products and services and helping build them through the investment model. So they'll provide excellent products and services. So we really are looking, for that partnership model. If I was looking for one thing that could really change the needle for what we are doing, it'd be that one thing that'd help us get 30% more oil out of the ground. I mean, you probably don't understand that there's, 50, all the reservoirs that are capped in this country, most of them still got 50% or more of the oil left in them. So that's why I said we're not short of oil, we just can't get it all out.
I think I have two answers, and not being the venture guy on the panel, I can answer it a little differently. I think the 7 billion or the 9 billion person that comes into our world, clearly our demand on energy is going to continue. And personally, I think investing in our friends at Chevron, or just from an oil perspective, is something that is obviously not a technology, but it's only going to become more dear and more expensive. Another comment I want to make that I personally would invest in, I hope, and just to share this initiative that's out there, is this whole securitization effort around solar projects. If you could invest in a solar project that returned, maybe the equivalent of a 20-year bond that returned 6-7%, would you do that today relative to your alternatives with projects that are relatively de-risked, delivering above their pro formas today? That's a great investment for fixed income investors that I would love to invest in. And there are many firms that are, I believe, right on the cusp, SunEdison among them, of delivering a securitized product which would open the market to small investors for the first time. So stay tuned for that development in the solar industry.
So I guess the area where I'm looking at is kind of in the cloud, social, mobile, SaaS, clean tech company. So if you're out there, I'm here for you. Seriously, I think you want to invest around the areas of clean technology which are replacement markets. So I think a lot of the panelists here have talked about inverters, balance of systems, racking, the downstream components such as the sun runs, the solar cities, the clean power finances. I think those are all phenomenal ideas. I mean, you're taking advantage of the fact that a portion of the value chain is being commoditized, which makes it so much more attractive for everybody else to grab their economics. So I think that's true in solar, that's true in wind, that's true in LEDs and lighting. It'll be interesting to see if it's true in AMI, to see how that develops around it, if there is going to be an interesting ecosystem to play there. Like Paul, I've been trying to find a great water investment now for just over 5 years, and it's a tough space. It's interesting, in fact, that there's only been one technology approved by the EPA in the last 20 years on water. So it's pretty fantastic idea to try to innovate around that. And I think the other side is energy efficiency. I think I don't know if it's in the commercial segment or in the industrial, or if it's in residential, if it's at the HVAC or is it at lighting. If I knew that, I'd probably start that company. But I know that there's probably, at least 1 or 2 or 3 or 4 of you guys who know what to go do there. So, those are the type of ideas we're looking for.
Coming from the IPO segment, and not the investing side, I'm a believer that there isn't a single, I'm pretty sure about the statement, there isn't a single industry in the world that doesn't need innovation, need to drive efficiency, and need to continually be more technologically advanced, which I think is the clean tech industry. And so, we have on file companies ranging from smart grid to biochemicals to waste to fuels to genetics for seed modifications for better efficient crops, to solar, currently on file to go public. So there's, in each of these industries, I know there's different segments where there's going to be a more focus on investment, but in each of these segments there are going to be companies that rise to the top, and they're going to be the leaders tomorrow.
Well, thank you very much, and I think this was a great discussion and very good perspective of each one of you. Let me ask you this question in a different form, and I think the answer would be different. All of you are very accomplished people, all of you. You've done great investments, you've taken companies' IPOs, you have understanding of technology, but we all make mistakes. I have made tons of mistakes in my life, in every job that I did. If we have to rewind and do it all over again, go back by 5 years, choose the time frame. Go back by 5 years, 3 years, 7 years, wherever you want to go back. And you have to do it all over again. What will you do? Let me start with you, Chris.
You mean with regards to clean tech?
Yes.
Okay. There's a lot of things I would bet on, invest in, Apple. 5 years ago was what? Around 4 or 5 years ago, I co-founded the Alternative Energy Group at Credit Suisse. I would do the exact same thing again. I ran the vertical there. This is a sector that I think I'm going to stay in as long as I possibly can. I wouldn't do anything differently. There's gyrations in the market. There's always gyrations in the market. Tech in the early 90s was, had its issues. Tech in the mid 90s had its issues. Tech in 2000 had its issues. But, a colleague of mine talks about a sine wave. Everything's a sine wave. Tech was a sine wave. There was good, there was bad. There was great, there was bad. There was good again, there's bad. It's going to be like that in clean tech. Maybe we had a downswing, we're going to have another upswing. We'll probably have another downswing. We'll have a bigger upswing when it comes out of it. So this is my cop-out answer. I wouldn't do anything differently.
I probably would have shorted the market in July of 2008. I would have gone long the market March 8th of 2009. And I would have shorted the market in May of this year. So yeah, somewhere in there. So I think that's what I would have done. No, but seriously, to be totally honest with you, after spending kind of 6.5 years doing this now and sitting on boards and watching companies go through their ups and downs, just like industries go through your up and downs, this is pretty normal. We talk about oversupply right now. In May of next year, we'll be talking about, people will be announcing new, I don't know if it's new wafering or new cell manufacturing or new synthesis drugs for cellulosic ethanol. So, like Chris, I don't think I would necessarily do that much differently. I thought there was going to be a longer cycle for clean tech, specifically for solar, before kind of the head got chopped off the body. But I don't think it necessarily changed who the winners and losers are of the business.
As a developer, I think I would have invested or started a wind development company in 2002. No question about it. And similarly, I probably would have gotten a 1 or 2 year head start before 2007. And maybe it just speaks to the cyclical nature that greatest inflection point in the curve has occurred, at least on the project side, and also I think perhaps on the technology side in renewable energy. We've been through periods of tremendous growth, the wind industry being about 6 or so years ahead of solar. And I think now, maybe I'm an example of the consolidation that's going on, and it's tough. It's tough for, I don't know about venture in general, certainly tough for small entrepreneurs to compete in maturing industries, maturing, consolidating industries of solar and wind. But obviously, it's a question that we always think about. You know, what is that next curve? What is that next sine curve or next technology that we're at that point of inflection? If I knew, I would be there. With due respect to my Sun Edison friends, I would love the opportunity, but I'll tell you, it's not obvious today. That's why I think you'll see a lot of renewable energy, clean tech entrepreneurs truly finding a safe harbor. It's a tough environment out there. The big ones, wind and solar, have reached that kind of maturing or consolidation stage where opportunities for the small guys are few and far between. So always looking forward, and haven't seen it yet.
So where to start? All those things that you change. I think that at the end of 2005, I should have rented instead of buying that house. That would have been a good thing to do. I don't think I should have gotten married the first time around when I was 22. Probably wasn't the wisest thing to do. But most of all, I think what I should have done is I should have started this entrepreneurial journey